Hello and welcome you into your trades with me, Ankita Saxena, and this is the show where we take you through how the market shaped up in today's trading session. Well, right off the bat, then it was a good day for the markets today. In fact, on the Nifty, we managed to break above the 50 DMA. We closed up 23,165. We solid gains coming in on Nifty today, with an uptick of 1%. Nifty Bank also, we closed the day, we closed 291 points, 0.5% above, for Nifty Bank also. We didn't see the outperformance coming in from Nifty Bank, like the previous sessions, but nonetheless, Nifty Bank was also trading up 0.5%. The broader markets also managed to recover through the day. There was a point where they had given up those morning gains, had turned flat, but they managed to recover. Nifty small cap closed up 0.4% and Nifty mid cap was up 0.5% in trade. Market breadth largely positive, in the favor of advances. Bharti, Airtel, there was Titan, Bajaj Auto, Britannia, Eicher Motor, BPCL, BEL that were really, giving legs to, Nifty's rally there. Just three constituents actually in the red. There were IndusInd Bank, Bajaj Finance and Trend. Barring that, all the other constituents for Nifty were trading in the green today. As far as the sectoral indices were concerned, the Nifty IT had, seen a good recovery today. It had reversed its underperformance today. That was trading with gains of 1.4%. In fact, very good recovery coming in for, names like TCS, Infosys, LTI, Mindtree, HCL Tech. All of them were trading with gains of almost 1.3 odd percent as far as the Nifty IT index is concerned. So good reversal coming in for IT as well. Largely a great day coming in for the markets, but there were a couple of other news flows that, of course, we had the Fed that held its rate steady. We had the Fed rate FOMC meet yesterday, and the Fed is holding the rate steady, and we will see two more rate cuts. That's the word coming in from Jerome Powell in this year. Well, also apart from that, back home we also had the entire wires and cables, pack that was in focus today, on the back of the fact that Adani Group is now going to enter into the wires and cable business, and on the back of that, we could see Polycab, KEI Industries, all of them hammered in trade today. In fact, KEI Industry was down almost more than 10% today. In fact, it ended the day 13% today on the back of that news flow. Also, we had the CCS clearing the mega 7,000 crore defense deal coming into the defense pack was also in focus on the back of that. The oil ministry is also likely to reapproach the finance ministry on the LPG dues. So that's the word coming in as far as the LPG dues are coming in. And also, finally, we also had the MHI that is seeking data clarity from Ola Electric. Ola Electric, the trouble doesn't end here for Ola Electric. In fact, Ola Electric has also been in focus for the last few sessions. So that stock was also in focus on the back of that. But to get you most perspective on how the market is likely to move in the future, we are getting on board Kunal Bothra, who's joining us now. Hi, Kunal. Thank you so much for joining us. Kunal, good afternoon. Kunal, a good day in the markets. In fact, if you look at the Nifty, we have broken above the 50 DMA. I mean, that has been posing a bit of a resistance for the last few sessions, but we've managed to break above the 23,000 levels. From here on, where are we headed? And also, is this a decisive breakout? Decisive breakout in the sense that now the positive trend is intact and the bulls have taken charge. Also, as far as Nifty Bank is concerned, what are the levels that you're watching out for? We closed a little shy of that 50,000 mark, but nonetheless, we closed actually, we touched the 50,000 mark. So are we going to hold on to those levels? Is it a sustainable level for Nifty Bank as well?
Gita, just a few weeks offline, we were discussing that how the market sentiment would start to look a lot more better because there is bound to be a process of a bounce. So, initially in a phase of a bounce, there is a bit of a circumspect approach from traders because of the last 5-6 months of a heavy baggage of price correction for many mid caps and small caps. And then comes a point where the sentiment starts to look a little bit more better. And then comes a point where the markets are into a comfort zone where traders or, they start to take a lot of risk, or the risk appetite comes back, the leverage position starts to come back again. So I think we are just into that first phase where the confidence is trying to come back for the market participants overall. There is still a lot of participants who are circumspect about the market rally, and they take every 100 points, 200 points on the index with a bit of a pessimistic kind of an approach, or more of a balanced approach, not extremely on the optimistic side. So that generally is a very strong indicator that we may probably see a further up move for the indices. The second, the most important part is that in this last 4 days of this 1,000+ point recovery for the index, we've seen a very balanced approach from large cap names. It initially started with the banking stocks, the NBFC pocket looking attractive. Then you had metal stocks, the real estate names started to look attractive, and now finally you've seen even Reliance trying to participate today. So when you have such kind of a mixture, it generally indicates that the market breadth is a lot more better and vibrant, and that indicates that the market rally should sustain. We are looking at a fresh base or a support of 23,000 for the index over the next couple of days. My expectation is that we should consolidate for the next couple of days before we inch up higher.
All right, but Kunal, amid this, this exuberance of sorts, that is the cheer that has come back in the market, where are you seeing value? What are your picks?
So I would look at two buy calls. The first one is upon NALCO or National Aluminium. That's a chart which is looking attractive. My sense is that the stock is heading towards a potential near-term target of 200, a flag formation on the charts. Stop loss could be kept at 185. BSE is the other stock which I've been bullish on, and the stock has moved up almost 400 points from the recent low of 4,000 levels thereabout. So would expect a further up move for BSE, and my expectation is a near-term target of 4,800 levels. Stop loss could be kept at 4,155.
All right, Kunal, thank you so much for joining us. Those are Kunal's picks, one being National Aluminium and the other one being BSE. But thank you so much for joining us. Moving on to the word coming in from the wise now. Our Value Quest, Ravi Dharamshi believes valuations are back below the long-term average and the worst could be behind us. Let's go across and take a look.
Valuations have corrected, come to long-term or below long-term average. So from that perspective, barring a major crisis breaking out anywhere in the world or domestically, I think most of the correction seems to be done. Can never rule out another 5% kind of a correction. But I would put my money on the fact that worst seems to be over for the moment. If there were 2 standard deviation above the fair value, they are probably at fair value now. I won't say that the conditions are not such that we need to swing the pendulum all the way back to deep value. I don't think that's the case. We are more in a mid-cycle kind of a scenario where it is a little bit of growth slowdown, little bit of margin compression. That's the issue. So this is not going to become a recession, or this is not going to become a balance sheet issue. So from that perspective, it remains a correction. And if it is a correction, then I think we can place our bets on the fact that more or less the correction is done.
All right, let's move on from there and see how the derivative diaries is panning out as far as the 27th March expiry is concerned. We can see a bit of a short covering that's happening on the Nifty, and this short covering happened in Nifty Bank as well. So the rally that we are seeing right now is on the back of that short covering that's going on. Well, let's look at the active call. Then the first call buying level is on 23,200, and the next call buying level is on 23,300 level with no resistance level on site. As far as the active puts are concerned, the first put writing level is at 23,100, and the second put writing level is on 23,000, and the support level is 23,100. That's where Nifty is taking its support at 23,100 levels. So that's the derivative diaries as far as 27th March expiry is concerned. But moving on then from the derivative diaries, let's take a look at the competition in the wires and the cable segment that is heating up. Well, now Adani Enterprises, the wholly owned subsidiary, Kutch Copper, has formed a joint venture with the Pranitha Ventures. My colleague Ashesha is joining us to tell us more about this. In fact, the entire wires and cable industry stock pack was in focus today on the back of that, whether it was Polycab, KEI Industries, they were all taking it on the chin after this announcement. Let's go across to Ashesha and find out more on this developing story.
It was just on the 27th of February last month where Adani, Ultratech Cement said that they are looking to enter the wires and cables business. They announced a capex of about 1,800 crores, which will be incurred over the next 2 to 3 years. They are looking to set up a plant in Kutch, Gujarat, and the plant will be commissioned by December 2026. And it has not even been 1 month since this announcement had come in, and now Adani Enterprises has, through its joint venture, through its subsidiary via a joint venture, is also looking to enter the wires and cables business. They haven't announced the capex plan as yet, although they have said that the initial share capital for incorporation of this particular joint venture will be 10 lakhs. But analysts expect that as and when the company ventures into this business, it will keep on growing its capital expenditure plan. Remember, the industry is very huge. Polycab is the market leader with about 17% market share. KEC International has about 7 to 8% market share, and industry dynamics suggest that global market is expected to grow at about 7.5% over the next 4 to 5 years on a CAGR basis. And when it comes to domestic market, industry is penciling in a growth of about 11 to 13%. Export shares stood at about 5% in 2019, which rose to 10% in 2024, and this too is expected to rise going forward. Competition, of course, seems to be intensifying with two major players now entering the industry. After UltraTech Cement, we now have Adani Group, which is venturing in, and on the back of this, the news flow that has come in, all of these stocks are under pressure today.
All right, moving on then, Anil Gupta, who's the CMD of KEI Industries, also shared his view with us. If there will be a heightened competition seen in the wires and cable industry as the new entrant forays into the industry. Let's go across and listen into his take.
Our preparation is clear that first, our company is debt free. So it is the cost competitiveness which plays. We are competitive in our operations. We are very, very competitive in our raw material procurements, and our cost control is exemplary, and also our financial cost is zero. So even if UltraTech has a lot of cash, but we also do not borrow. So I don't see any reason to get feared, and nobody can take our market share or even our growth.
All right, moving on to a couple of other stocks that were in focus today. Besides, of course, the wires and the cable pack, we also had GRSC that was in focus on the back of an MOU. We had NCC, we had Indigo also in focus today. But why were these stocks buzzing in trade today? For that, my colleague Rabinder is joining in. Take it away, Rabinder.
Well, as Bharti Airtel is in focus, where the company has become a Kerala's leading telecom operator with the highest number of network sites in the state, and it has added 2,500 news sites in the record time, strengthening its network coverage across all 14 districts. And according to an Open Signal report, Airtel is Kerala's most awarded telecom service provider. Moving to next, GRSC were also in focus, where company has signed a MOU with PWD Road and Bridge Nagaland for supply of 8 sets of double-lane modular steel bridge in the state of Nagaland. Apart from this, Avenue Supermart were also in focus, where company will invest 174 crore by subscribing 4.6 crore equity shares of rupees 10 each of Avenue E-Marts Limited, which is a subsidiary company of the Avenue Supermarts, at an issue price of 37.41 per share, including a premium of rupees 27.41 per share. Moving to next, NCC were also in focus, where company has received a letter of acceptance from Andhra Pradesh Capital Region Development Authority for construction of roads, drains, water supply, etc. With the cost of rupees over 2,000. Apart from this, Indigo were also in focus, where Kotak Institutional Security has come out with their note on Indigo, and they have given a buy call with target price of rupees 5,700. They say that the management aims to handle 200 million passengers by FY30, reflecting about 80% growth and suggesting its capacity will double by then with longer routes. And the airline is focusing on reducing aircraft ownership cost and improving fuel efficiency by 5% over next 5 years.
All right, moving on to an exclusive then. We understand from sources that the Oil Ministry will approach the Finance Ministry again to discuss the LPG compensation. Now, we understand that Centre may be looking at compensating OMCs in tranches over the next fiscal. Here's a report by Prakash Priyadashi.
Yes, we are learning from our sources that the Oil Ministry is likely to approach the Finance Ministry for compensation on LPG sales. We're given to understand that the Oil Ministry has held meeting with the oil marketing companies to review current situation. In fact, they were expecting financial support from the government in second supplementary demand for grants for FY25. But no additional allocation was made for oil marketing companies. Therefore, Oil Ministry is likely to approach the Finance Ministry once again. Sources are also indicating that the oil marketing companies' losses on LPG sale have mounted to rupees 250 per cylinder. In fact, they are facing losses due to LPG sale below actual market price for quite some time. In fact, Oil Ministry had sought approx rupees 35,000 crore compensation from the finance ministry to cover OMC's losses. But no additional allocation was made in second supplementary demand for grants for FY25. Therefore, it is expected that the oil ministry is likely to approach the finance ministry once again. Along with that, sources are indicating, however, OMCs are now making profit on sale of petrol and diesel on back of reduction in crude oil prices in the international market. But it's a fact that retail prices are not being revised despite sharp fall in crude oil prices. Therefore, it seems that the finance ministry will take all factors into account before taking any decision.
All right, moving on to a counter that was in focus today, and that's Ola Electric, that is under fire as the Ministry of Heavy Industries seek details regarding discrepancies between the company's reported sales and actual vehicle registrations. According to the sources, the MHI is set to send a second letter seeking clarifications on Ola Electric. My colleague Samir Dixit is joining in with more details.
Well, it seems that the trouble is mounting for the EV player Ola Electric with each passing day. In a fresh development, sources have indicated that the Ministry of Heavy Industry is likely to send a second letter, sort of a reminder letter to the EV player, maybe by next week, asking them to share the details of the EV, the two-wheeler electric vehicle sold by Ola Electric, the sales number as well as the registration number. There are reports that suggest that there is a huge gap, there is a mismatch between the EV sold or the sales number as well as the EV registration number, the vehicles which are registered on Vahan portal. And based on these reports, the Ministry of Heavy Industry, it has come into action. The first letter was written by the Heavy Industry Ministry on 11th of March. So far, the EV player has not responded to that letter. And now it is to be understood that roughly around 2 weeks' time will be given to the EV player to reply to that letter. And if not done so, then a second or a reminder letter will be sent by the Heavy Industry Ministry, and then the further course of action will be decided. But if you go by the report that suggests that in the month of February, Ola Electric says that the sales number crossed 20,000 mark, whereas the vehicles which are registered on the Vahan portal were just around 8,500, less than 10,000. So there is a clear gap or sort of a mismatch, and that has raised the concerns of the government. And recently also, if you see, the Maharashtra government or even Maharashtra RTO carried out inspection at Ola Electric dealership, verifying the documents. A similar sort of exercise was done by the other states as well, whether it be Punjab or Madhya Pradesh. So it seems that the troubles for Ola Electric is mounting, and they have to give a lot of answers to all these questions to the government, also to the public as well.
And well, time now for another exclusive. We understand from sources that the Cabinet Committee on Security has given a go-ahead for a 7,000 crore deal to procure equipment for advanced towered artillery gun system. Kalyani's group Bharat Forge and Tata Advanced Systems will take up the manufacturing. Let's go across to my colleague Prakash Priyadarshi, who's joining us with the details.
Yes, it's a positive development for domestic defense sector. The Cabinet Committee on Security has cleared a proposal to acquire advanced defense equipment. We're given to understand that the CCS has cleared a proposal worth rupees 7,000 crore to acquire advanced artillery gun system for the Indian Army, a very significant development towards making India self-reliant in defense equipment manufacturing. As per the proposal cleared by the CCS, ATAGS will be produced by Bharat Forge and Tata Advanced Systems, where Bharat Forge will produce 60% of the guns, whereas Tata Advanced Systems will manufacture the remaining 40%. It will be signed in next few weeks. And the most significant part of this whole development is that the government of India is likely to approve many such proposals going forward in order to meet Indian Army's requirement. That means there are immense opportunity for the domestic defense equipment manufacturers.
Moving on then, Bhaskar Gotri, who's the EVP Cloud and Cybersecurity Services Tata Communication, speaks about their recently launched Vayu to transform cloud fabric in intelligence enterprise. He also shares how the US export restrictions on GPUs and trade war will impact the AI compute infra. Let's go across and listen in.
We are one of the few companies that has been empaneled by MITI. So now it's a question about how we got our portal, which is, so we have a GPU infrastructure, then we have a platform. We make both of those available for the nation, and the portal is now getting deployed. So those are the next steps in terms of consumption and price performance on top of that. There is some talk about restrictions, and there are some limits of 50,000 GPUs, and I think we don't have that problem right now. We would love to get to 50,000 GPUs deployed to help the country further the AI mission, and I think regulations will come. I am not focused on that right now, and that is not a gating factor.
Moving on then, CEAT has launched 3 new tyres under the Sport Drive range, which include the ZR Rate 21-inch tyre, run flat tyres and low noise calm tyres. We spoke with Arnab Banerjee, the MD and CEO of CEAT, to understand more about it. Listen in.
It will be available, all these tyres, starting with Mumbai in April month, but in all other towns through April and May we'll make it available. Run flat tyre, the Z rated 21-inch tyre, as well as the calm technology noiseless tyre, all of them. Now the margin profile will definitely go up. The higher rim size tyres, 17-inch plus, have a better margin profile. Within that, special tyres like the run flat, like the Z rated 21-inch and the calm tyres, they will have a better margin profile within 17-inch, which itself has a higher margin profile. It will take time for the volumes to grow because they are at the evolving end of the technology, but definitely plus for margins.
All right, with that, it's a wrap on this edition of Your Trades. I'll take your leave. Thank you so much for tuning in.